Let's start, first of all, by talking about how we're going to deal with the next 40 minutes. Having had these discussions a few times, I realize that the conversations can become quite mixed up and unstructured. So what I propose to do today is we're going to talk about four things. We're going to talk about the quality of the electrical supply, the costs of the electrical supply, the sustainability of energy, and how these companies are going forward and thinking about the process in which they're going to buy power into the future. And the way I'll handle it is I'll ask each of the panelists a question first, and then ask the others to expand on their answers if they feel that they need to. But let's start first of all by introducing the panel, and perhaps starting here, Steph, would you like to introduce yourself and tell us a bit about yourself and the company that you are working at?
Sure, Grant. Thank you very much for that. Name is Stefan Sittert, and I'm working for Samancor Chrome, which is a chrome miner and also a ferrochrome producer in South Africa, limited to South African operations. We are probably the biggest chrome miner in the world, and also very close to the biggest in the ferrochrome production. And we consume, in the region, depending on the time and area, we consume roughly between 600 and 800 megawatt directly from Eskom. So we are a fairly large, energy-intensive company within South Africa.
Great, thank you. Alastaire.
Thanks, Grant. Alastaire Dick. I'm the energy specialist for the Goldfields Group Consulting. We have operations in Peru, Ghana, Australia, and in South Africa. We've recently gone through a sort of a 5-year energy security planning model on all our regions, and we'll probably talk a bit about later about our red flags, which is Ghana and South Africa, so I can imagine.
Thanks, Alastaire. Barend?
My name is Barend Peterson. I'm the executive chairman of the BS Consolidated Mines, operating in South Africa. We manufacture little and in fact extract those little precious things that is of some value, extremely important to life. We like to believe that we are sparkling, and we add sparkle to life and zest to love. We are not, in today's terms, an intensive energy user, given our profile of mines and our disposal, but certainly we are a long-term investor in South Africa.
And Roelof?
Thank you. My name is Roelof Retief. I work for a company called International Ferrometals, which is also in the chrome mining and ferrochrome production space, much more junior than Steph's company, which also brings its own challenges in operating in South Africa with the energy situation that we deal with.
Great. Well, a great pleasure to have you all, and thank you very much. We've got chrome, gold, and diamonds. Let me start off, and if you don't mind, I'm going to start off with you, Roelof. It's almost impossible to have a discussion at the moment with anyone without energy, without getting past load curtailment and load shedding. So let me try get that off the table first of all, and just ask you how you are thinking about the problems with the quality of supply, both in terms of perhaps the form of the power that you're being supplied, as well as the reliability, whether you're being load curtailed or load shed. How do you go about thinking about the impact on your business, and what are the short and long-term plans you've got to mitigate the effects?
Yes, I think being in an industry where we are sort of curtailed in the technology that we apply, load interruptions is extremely detrimental to our business. Both, obviously, the most common or the most obvious fact is that you lose capacity. And the next thing is also that you have unintended consequences because of that, because of the technology that we apply. So it's actually a no-no for our business. We can't afford to, especially a small operator like us, which just brings pressures in terms of fixed cost dilution, and also unintended consequences of having to switch out capacity during certain times where there is shedding or a request for load reduction. Other than that, it's something that we are looking at is to actually start looking at, obviously renewables is one thing. That has still got its challenges in terms of cost and also time of use, especially when one looks at solar energy. The other options that we have is to actually start converting technology into a more favorable, can I say, time of usage, where in certain times of the day you actually use more energy, and in certain times you use less energy, which then obviously puts some strain on your distribution networks coming in, and capacity and things that you have on site to do that little bit of flexibility. But I think the main thing that we need to look at is and it came up in the previous discussion as well, is collaboration between industry and the national energy suppliers and all the stakeholders. Because in the last 3-4 months, I've heard of very innovative ways to actually curtail and to be able to keep the industry going based on good collaboration and very innovative thinking.
So Roelof, internally at least, do you have a number about what it's costing you? I mean, I'm not asking you to blurt it out here in front of everyone, but is that the way you approach it? Is someone saying, you know, of our income statement this year, so much is lost because of load curtailment?
Yes, we obviously do have that figure, and we're looking at other opportunities and how can I say, innovative ideas to actually reduce that to as little as possible. But yes, it is a figure, and it's a figure that stands out like a sore thumb. Yeah.
Good. And Barend, De Beers, how's it dealing with load curtailment and quality?
Firstly, we installed generators in 2009 at Venetia, our main operation, so that we've got capacity to deal with the load shedding and curtailment. And then on our other mines, we can have it for up to 4 hours without impacting production. The challenge, of course, is the reliability. One thing that business appreciates is reliability, consistency, and security of supply. The moment you introduce uncertainty into what is a normal productive operating environment, there are different considerations which ordinarily would not have taken place. So I believe we are incurring abnormal costs in this environment, and generally speaking in the mining industry, I think we are incurring costs today which we ordinarily would not have incurred. It also places marginal mining operations at risk, in the sense that and because we are now focusing, broadly speaking, not only as the base, on only looking at and directing our energies at higher grade, lower costs areas of our business. So it places a material segment of the industry at risk if we are not able to find lasting solutions in order to obviate this uncertainty that brings about these things. So from our side, as the BS, we have capacity at our flagship operation to ensure that we can deal with this critical thing. However, on a broader front, I think they must be concerned, and we need to find collective solutions. And the mining industry is known for developing solutions. But I also think that sometimes the collaboration needs to be progress beyond articulation of objectives. We actually need to try and find workable solutions that is implementable and indeed implemented to ensure that the collective will of the industry and government and the energy suppliers look forward. And then, of course, renewables for the future is part of what we're looking at, because we're investing 20 billion and, up to 2021 in our flagship operation. It is critically important that we resolve our supply issues as we move forward.
Great. And you know, what are you doing about load shedding? I mean, is it just generators as well, or is you're perhaps a bit big for that?
We do have 15 megawatts of generators. Fortunately, Goldfields is our South Deep mine is still technically in a ramp-up phase, so we aren't yet at our capacity demand requirement at the moment. We're around 55 megawatts, heading up towards 75. But we had an interesting conversation with the other top gold miners, Anglo Gold and Harmony and Sibanye, just to really just have a discussion about what are the thoughts. And the interesting thing, and this was back in February, Grant, that there really isn't one solution that jumps out and says, here's the answer. It's really a basket of opportunities. And we even looked at the possibility of a parallel grid system interconnecting us, because we're all somewhat neighbors in that area, and it also doesn't really make a lot of sense from the point of view that solar PV, you know, you wouldn't want to do a parallel grid with your neighbor when you can build it in your backyard. You know, there were studies done on biomass. Now biomass certainly has the benefits of the social license to operate, in the sense that it has more opportunity to give jobs, as there's logistics involved and there's some form of agriculture but it also sort of doesn't make sense on any sort of medium to large scale. And then, you know, anything else, you know, is subject to the wheeling fee or to the use of Eskom's network. So we did sort of put our heads together, and somewhat sadly, I guess, you know, there wasn't there was sort of a hope and pray scenario that Eskom might get its ducks in a row over the short to medium term. But as I said, we're in a ramp-up phase, so we have the luxury of being able to levelize our demand curve for now, mill twice as much during the day, and you know, do our lifting and hauling in appropriate times for now. But we will run into a situation where we will need to look elsewhere.
That's interesting. You're actually trying to shift your load around because you've got the space to do that. And Steph, I mean, what do you guys do when you get curtailed? And what do you plan to mitigate that?
Right, I think it's important to know that, you know, industry has been subject to load shedding for a number of years now. It's not been the last 1 or 2 years. I think programs that Eskom has run, like demand-side management, is a form of load shedding. So, you know, we've been subject to that for a number of years. We've been, you know, learning to manage that. We have a number of furnaces in the group, and so it's a bit more easier for us to manage load shedding throughout the group. However, you know, I agree with Roelof and my other colleague. It's been detrimental to growth in the industry. You know, not having a reliable electricity supply in our industry has resulted in the Chinese overtaking us. Basically, you know, we have 80–90% of the world's oil reserve, and you know, through the unreliability and not having a guarantee of new supply coming onto the grid. No investment has been made in South Africa recently, and all of that investment has gone to China. So I think that to me is the biggest cost to South Africa. How we deal with load shedding recently, I think we manage it through changing our profile a bit. We have been looking at various options with regards to own generation, utilizing waste energy streams, and we have commissioned a small waste recovery power plant at one of our smelters. So we're continuously looking at reducing our reliance to electrical energy. But I think an important note to make is where the renewable industry comes in is we need a reliable source of energy, but not at any cost. I think that's important to note. Electrical energy is probably the second biggest cost input to our business.
But I presume it would be fair to say that really renewables is not a solution to load shedding or load curtailment. The sun ain't shining and the wind ain't blowing when you're getting turned off.
It's a partial solution, and electricity storage is still some way away. How far? Debatable.
But it's going to really affect the cost profile. You add some batteries or any storage to PV at the moment, and it probably makes it unaffordable. Let's shift the discussion onto a bit about cost. And Steph, if I can start you with the lead question. I mean, not only do we have load curtailment issues challenging the industry, but as we've seen in the previous presentation, you need to have some view of energy costs going forward. And not only does it seem to be all pressures upwards, but there's a lot of uncertainty if you look forward 5, 10, 15 years through the life of mine and perhaps further. How does your company go about, one, forecasting energy costs, and then again, what plans do you put in place to mitigate rising energy costs?
Grant, as I mentioned, we're continuously looking at reducing our reliance to electrical energy. Moving away from what we perceive now a costly energy to a more cheaper energy, and that will require changes in technology and investment into the country. We certainly need, both from Eskom, NERSA government, a predictable price path going forward in order to make those investments. For us, as I mentioned, electrical energy is the second largest cost input into our business. We cannot continue with the above inflation increases going forward. We've seen, some of our sister commodities, manganese, closing smelters due to the high tariff increases. So simply there is a tipping point where one will start looking at alternative supplies. The great risk in that is that if Eskom loses its baseload customers, the tariff, increase will just spiral up. And it's important for us to have a healthy Eskom with competitive pricing going forward.
So, Alastaire, what happens to Goldfields, both in its local and African operations? What are your view on electrical prices, and what happens to you when prices start rising? What do you do about it?
Well, that's the big question. There's a myriad of thoughts around where Eskom might be. I mean, Mike showed the two graphs with the green tick and the red cross of where it could have been and would have been. So look, I don't know, we're probably sitting around CPI plus 6 is the thinking at the moment, and where that might be. But we do know that there is uncertainty in that. But to at least try and draw a line in the sand, trying to use that as a gauge and a guide. And as I said, I mean, we are looking at renewables. There is promise that price parity can be achieved to some lesser or greater extent. But as I said, it's a partial solution, and as Roelof said, there's the hope and pray that Eskom will will get itself right and get back on track.
Does the price of love have to go up to pay for the rising electrical costs in diamonds?
I think we are all faced with the similar pressures, which is, and we try, when of course you model this current environment leads you to be more conservative in your assumptions. Secondly, I think that most of the low-hanging fruit of energy conservation has been realized, and over the past few years, extensive, and now it's the hard nuts to crack going forward. I think one of the things that was looked at in the past also is the increased utilization of chemical energy versus electrical energy in crushing processes, etc. So I think when you factor this into long-term and you look at your projects going forward, it has a negative impact in terms of the cost escalation and electricity cost. The rapid increase in costs compared to other cost drivers are making the electrical cost as a key driver of sustainability going forward, both in terms of reliability and in terms of cost escalation.
Let's perhaps, unless there's something you wanted to add anyway, Barend, around, let's talk about sustainability. And I'll push this question to you, Barend. Mining is inherently a unsustainable business. We sit on top of ore bodies, we mine them out, we fix them up, and we move on. How does sustainability and sustainable energy fit into that business model?
I would not necessarily agree that it is inherently unsustainable. It's inherently sustainable for a period of time. Having said it, I think I think we all are aware that it's a limited life of mine. So for as long as in a period of time, you can take a view around electricity supply. None of us expect to be around forever. But within a period of time, and I think that's where Mike's presentation around his 60-year view of life comes in. So I think the challenge, not only for the mining industry, but also from a regulating perspective, is we have these resources. To convert and extract, we require energy. And how do we then collectively find solutions to be sustainable? I do believe that there is sufficient thought leaders in South Africa to be able to find the solutions, and more importantly, cost-effective solutions, because it's not at any cost. Sustainability implies that there is economically sustainable. Because the critical thing is, how do we extract the mineral resources of South Africa in an economic, sustainable manner? So it is finding that balance that sometimes proves to be somewhat elusive. But I think from a sustainability perspective, when all stakeholders collectively can contribute to the determination of solutions, as opposed to only expecting solutions from one or other party. And I think there is sufficient creative ability and the will, and the price is big. I mean, if we look at the potential of a sustainable mining industry for the foreseeable future, the impact on South Africa can be huge. And therefore, it requires all of us, as the current custodians of the mining industry, to be actively pursuing the development of sustainable solutions to meet the challenges of both of energy regulations, etc., to ensure that we have an economically sustainable mining industry. And that we are, through that, able to attract the kind of capital required for the industry.
So that's mostly focusing on the sustainability of the industry. Perhaps to you, Roelof, what is the real responsibility about sustainable energy, about the care for the environment, and how do we weigh that up against this balance that we're talking of between the cost of energy, the sustainability of the mining industry, and the responsibility to reduce carbon emissions?
I think it's, first of all, it's important to note, and I want to latch on to what Steph was saying, is that although a country like China has started to produce more ferrochrome, they don't have a ton of ferrochrome as a natural resource. So they import basically everything, and it comes from South Africa. So whether ferrochrome is produced in China or South Africa, the mining activity still takes place, and I think from a social responsibility that we have in South Africa is to ensure that we actually add value to that activity that happens in South Africa in any case, and I'm absolutely convinced that through as I said earlier, and it's been echoed as well, is that through collaboration with all the stakeholders, there is a solution to look at alternative energy sources which can be utilized to make our industry, can I say, to reduce the carbon footprint of our industry. But we need the key here is sustainability, because I can sign a 20-year power purchase agreement today for a solar plant, but it would be probably about, in our case, it would be about 10% of our energy usage. I'm still reliant for 90% of the rest of our energy from the national network. And if my industry and our plant it's not economically sustainable, then it puts risk on the green energy that I'm also starting to use, and it might come into the future that I can't use that because it's a take or pay agreement, and it just snowballs into economical fiasco, and that's the thing, we can't predict that. And I think your earlier question in terms of energy prices, what will happen if energy prices goes out of quilt in terms of making us a sustainable operation? Then everything goes down. You lose jobs. Secondary industry starts getting affected, like we've seen in the platinum industry in Rustenburg area. So it's the sustainability has got everybody's got responsibility to ensure sustainability. The fact is, we're going to mine chrome because stainless steel growth conservatively over the years has been between 2 and 3%. For that, we need to add ferrochrome capacity of a reasonable unit every 2 years. Now, who's going to do that? We mine the ore, so are we going to export the ore, or are we going to do that ferrochrome capacity in South Africa? And I think that's the question that needs to be answered, because if you have that sustainability, the percentage of renewable energy, green energy, and being more energy effective is going to snowball to something that can be sustainable over a 20-year lifetime of a project.
Some difficult trade-offs there. Steph, perhaps to you, how does Samancor make this trade-off between sustainability and care for the environment?
Yeah, I think it's a difficult trade-off. When you beneficiate a commodity, you need energy, and with energy comes a carbon footprint. So, you know, we've been in this industry looking at reducing certain energy, such as electrical energy, purely based on cost, and have made significant investments in technology to achieve that. You know, so with that, the carbon footprint reduces as well. But I think we need to, we obviously need to do much more with regards to, carbon footprint. But as Roelof mentioned, you know, there's a big trade-off. If you move over too much, you become unstable from a financial point of view, and you close down. You know, as simple as that. So there's a very, very thin line with regards to moving forward. I think, you know, the way forward should be a lot of collaboration between renewable suppliers and the mining industry, trying to get solutions with regards to, you know, different models. You know, the models that we've received from the renewable sector, you know, at large was let's call it a one-sided model, where a lot of the risk needs to be taken by the off-taker of potentially signing a long-term off-take agreement. So, you know, the renewable industry needs to accept that we cannot take all the risk. We cannot, you know, accept energy at any price. And obviously then, you know, we will need to bring in the funding institutions to that as well.
Great, thanks. We've got 10 minutes left. I'm going to pitch my last question to Alastaire, and then I'm going to open up just for the last 5 minutes to anyone who's got a question from the floor. So please just jot down your questions in front of you. We'll ask for the lights up at that point, and then if you just stick your hand up, someone will come to you with a mic. Alastaire, one of the challenges, I assume, running a mining company these days is having to deal with all the PV salesmen coming to sell you things. Can I ask the last question to you, which is, how are you guys thinking about your procurement process of energy? In particular, I mean, generally, all energy, electricity specifically, and then perhaps you could just focus in on the processes that you're going to run about purchasing renewable energy.
Well, Grant, we've gone through our, similar to my colleagues here, sort of an energy security type of planning scenario. And funny enough, you know, maybe not so funny, we've started from considering right out to a blackout scenario. These are words we don't want to hear in a mining operation, and what that looks like. And we've then built the model up from, well, how much generating capacity do we have on site? We've got about 15 megawatts of diesel generators on site. So the procurement mentality has sort of started from there in trying to secure bulk diesel in that eventuality, if it does happen. Those generators then take time to synchronize, and at our particular operation, we've got 2 shafts some distance away from each other that are interconnected, and the timing of how to then evacuate people and then secure the mine. So we started from that level, and then the curtailment, as I said, we are in ramp up, so we're managing to levelize our curve for now, but it won't happen that continues as we ramp up to full capacity. And as you know, mining operations are 24/7 operations, and there isn't too much opportunities to move loads to a daytime scenario where PV can then be used as the offset. But there are certain things that you can do. For example, our ice plant, we can make twice as much during the day, but it's not significant. So we are looking like our neighbours to start looking into PV
and what sort of processes are you going to run? Are you going to consider owning yourself? Are you going to do RFPs? Are you going to choose a partner?
Well,
how are you going to deal with it?
We haven't sort of got to the end of that thought process, but you know, as a gold miner, we do focus on the little gold bars that come out at the end and aren't in the power industry. You know, it's not our core business. So we would tend to favour the over-the-fence PPA agreement, but as Stephen said, we need the industry to come on board and feel some of the pain that we, not just stand back and say, well, fine, there's your PPA, the rand per kilowatt, please.
Do any of you want to add to perhaps how you're going to be dealing with procurement of energy, generally and specifically in renewables, over the next few years?
I think we've personally been, or our company has been contacted by people wanting to sell us renewable energy. But most because of the pricing structure that's currently in place for renewable energy, if we spend a rand capital, we need to decide where currently we get our biggest return. Because first of all, capital is very rare to raise these days because of obvious reasons, as also we saw in the previous presentation, of can we say country risk, with all the factors that plays a role in South Africa, operating in South Africa. So it is. I think we're at a tipping point where things might change in terms of the economic viability of that. But we, in our industry, we need to be very prudent in terms of how we spend our capital, and we need to get for sustainable, again back to the whole sustainability issue. For our operation to stay sustainable for a long period, we need to use our capital prudent to make sure that that's our first priority, to do that instead of buying something that's the right thing at the time to do.
Great, thank you all. Can we ask for the lights up, and whilst I ask a question, if someone would put their hand up if they've got a question to ask. If we're just there. My question is going to be, what's your advice to the IPPs who visit you daily with their PPAs? And then we'll take that. Or, can you think about that question? Can we take your question, please?
Hi, my name's Ian Gebby from DRA. I'm going to address the question to you, Grant, but would like all the panelists to reflect. Is there an appetite in your organizations to take on NERSA to enable a wheeling of power from an independent power producer to your organizations, and thus enabling you to purchase power at a sustainable level from a second or an alternative location in the country to ensure that you've got a sustainable power to your organizations?
Thanks. Steph, do you have some advice for the IPPs, and then I'll try and answer that question.
No, sure. I think, as I mentioned before, you know, it's important that we understand the risk allocation. It's important that the IPPs understand our business. As Roelof mentioned, you know, we produce ferrochrome. We certainly find it very difficult to get funding for ferrochrome projects. So it will be very difficult for us to fund any other type of electrical energy project. So, you know, we would like to see, and how we would evaluate that is against Eskom currently. So, you know, getting close to the terms and conditions from a typical Eskom offtake, that's what we like to see. You know, we would not want to look at you know, long-term offtake agreements with extensive terms that, you know, that changes our operating philosophy. I think that's important to note.
I'll try and answer your question. You know, I think the only way it works to build a renewable energy plant is to amortize the finance, operating costs and capital costs over 15 to 20 years. If you do it any shorter than that, it's more expensive than Eskom, probably for the next several years. So there is only one way to do it. If we're going to build the plants, it's much like e-toll. Someone's got to pay for them. The National Treasury can pay for them, or we can pay as we go through the boom. I think the stage of the industry, so certainly NRG is happy to apply capital to renewable and other energy plants, not limited only to renewable, happy to build diesel generators and the like. But what we need to figure out, I think, specifically in the mining industry, is what happens when we get to the point where you either don't want to buy the electricity or you're not there to buy the electricity anymore. It's essentially that end part of the contract we don't know what to do with. And at the moment, the regulatory environment doesn't enable us to resell either you, the contracting party, or the energy utility. We don't have a market to resell that energy. But I think practically in my mind, if there's a big plant sitting at one of your smelters and the smelter stops working or halves its electrical load, we just simply synchronize with the grid and sell it to someone else. So I must say, I think the standoff that's probably existing at the moment is probably going to disappear over time as the secondary market for reselling electricity comes in. And perhaps the concluding mark, if I can thank our guests, we've run out of time and managed to catch up some time. Perhaps my concluding remark is my experience in entering into these discussions, with a little bit of mining experience, a lot of retail experience, which is absolutely useless in this room, and some energy experience, is that we actually need to get together and make sure we all understand what we're talking about. You know, I'm not familiar with what a contract for difference is, but I know it's really important to the secondary energy market. We need to start understanding exactly these terms of these MPAs, of these PPAs, their tradability, their marketability, and we need to understand and actually, I think, direct government and regulators so that we can take away this risk, because in the end, someone has to pay for it. Whether Eskom generates it or the Chinese generate the electricity or we build plants in South Africa, someone has to pay for it, and we just need to make sure that the tariffs are as low as possible. So, sorry? Can we just get a mic there?
So as I understood the question is, as I understood the question, is industry mining or who is challenging the regulator with regards to the wheeling charges? The EIUG is challenging them. I was previously the chair of the EIUG, and we commissioned a study, a very comprehensive study, on what are the issues confronting wheeling. The current situation is that if you wheel from an Eskom supply to a consumer that is in an Eskom supply, that is already possible. And it's reasonably affordable, save for the subsidy charges which are still locked in the wires business. That requires a policy change, which in our view is eminently changeable. So that needs to be challenged. The very difficult one is where a producer either sits within a Munich and has to wheel power through Eskom, and even worse, still back through another Munich for the consumer. That is an extremely difficult one. And the reason is twofold. One, because there are subsidies in those wires, and secondly, the municipalities add, in addition to that, certain levies, which they find at this moment difficult to remove. But practically all those problems can be solved. And I come back to what I said. We need to collectively collaborate much stronger together to get these things solved, because this is not a technical problem. It's purely a misunderstanding of the facts.
Yes, and if I could agree on that last point, it really, I must say, when we are talking to companies, we would really appreciate having the CFO and the general counsel in the room, because it's mostly a finance, a regularity problem, and not so much a technical one. Anyway, I think we're out of time. Perhaps if I can look to the... there are some more questions, but we're out of time, so I'll let you give them the bad news.
You did a brilliant job, Grant. You kept us to time. I'm very happy. Could we just give a round of applause to this panel?